Good evening, everybody. How are we all doing? Happy Sunday. Welcome to Market Kickoff with Nick4ATick. I am Nick. How was everyone's week? How was everyone's weekend? I don't know about you guys, but I don't really know where we go from here. I got a bit chopped up last week in the latter half of the week. Oh, thank you, Andrew. I always forget to quick double check of the sound and video before I just start rambling on as I usually do. But yeah, thinking back at this last week, I had I don't know, kind of a mixed bag. It was not great towards the latter half of the week, but for the most part, I mean, we were pretty much just range bound the way you might expect us to be. And I can't even say, looking at this, when we kind of zoom out a little bit, looking at the last few weeks and all the uncertainty, all the headline risk, tension still in the Middle East, it seems that we're actually leaving this range, I guess, is the elephant in the room. Like, yes, we kind of broke this last 3 weeks of balance, but did we really know? We kind of just came up to where we were about 3 weeks ago, 4 weeks ago even, and now it's kind of truly decision time for the market. So, you know, just thinking logically, you would expect and want, if you're bearish or you love trading ranges like Nick Dolby does, then you kind of want to see sellers initiate in the early parts of this week to push us back into this range, to push us back into this value area. And we really are at a decision point when we kind of look at this from a volume profile perspective, and you see this high volume edge right here. And you could see if we don't continue to see volume come in and buyers step in at this kind of 61.30 spot on ES, then we could very easily fall back into this old balance range that was just kind of, you know, the 3 weeks of gap downs, or excuse me, the 3 weeks of gap downs that we kind of saw in a row, and then the market just slowly traversing, you know, volume low and drifting higher. We've seen this time many times before, but is this time different? I don't know. So before we really jump into this week's plan and prep, I mean, from the chat, how did everyone do? Have you been navigating these last couple of weeks well at all? I mean, for me in particular, at times I've been scared to go long with a lot of certainty. And if you guys have ever seen me trade and know my style, when we're just kind of, you know, low volume, chopping in a tight range, I just tend to struggle. I tend to not look to initiate too much. And when I do, and I'm wrong, I tend to, you know, kind of spiral and be catastrophic at times. So the last few weeks of volatility that we kind of saw, it pretty much died last week. Got smoked on Friday. Play the extremes. Yeah, good. Yeah, it was a tough week, guys. I believe Tuesday and Wednesday were the two lowest volume days so far of 2025. So we didn't really have a lot of direction. We didn't really have a lot of perspective. The market was kind of waiting for tariff news, to be honest, and we didn't really get any. You kind of got more just kick the can down the road and no real information. And as I said, now we're kind of looking at this at a decision point where the market needs to decide, are we going to buy up here and, you know, go hit 6,200 and hit a new all-time high? Or are we going to fall back into range with all the headline risk and everything else that's kind of out there in the world? Does it make sense to find value at lower prices? It remains to be seen. So looking at this week and, still kind of, even if we go back to kind of the pre-FOMC all-time highs, your all-time high for the March contract is going to be sitting at 61.85. So if we get up here, I would expect us to go make a new all-time high, probably stall out somewhere up here in the, lower 6200s. So yeah, the market has a decision to make. Ever since we made that all-time high, we've kind of just been making attempts to come back up to this area, and then we've failed every single time. So I'm not ready to the air horn's filled for this week. By all means, I will happily hit it. I just have a hard time being the first person to buy this area when we've had multiple reoffers and moves lower. And in theory, we are still kind of trading in a range. So looking at this, thinking about this week, it is a shortened week. If you guys do not know, tomorrow is a half day for futures. The markets will be closed for President's Day. So, if you can get a good trade tonight or tomorrow, lock it up, come back Tuesday when volume's there. It's probably going to be sloppy. It's probably going to be slow. It's probably going to be frustrating. So do not screw up your entire week by trying to trade tonight and tomorrow. Volume will hopefully return on Tuesday and we can, make a decision. Without news or one of the Asia markets or the European markets is pushing us back into this range, I would expect us to kind of consolidate, relatively tightly in the next 24 hours. But we'll see. I am placing my weekly pivot. If I zoom out a little bit, not too far, basically for the last 4 weeks of volume here, I'm basically putting it at the value area high. So for me to get bearish and not look to kind of buy the top edge of basically last week's value area high and even down towards the point of control from this past week, I would really want to see sellers really push us back into this value range and kind of pierce inside these last couple of weeks of value area highs. I know it's a little skewed because Friday was weird. So I'm still considering this basically pretty balanced and that bottom of that range basically being the 6100, 6105s kind of area. I would want to see sellers continue to initiate and build volume below this for me to, really be looking for shorts, at least for the time being, to kind of maybe go traverse this, down lower towards the 6,000s again, the other side of the value range. Very possible if we don't see buyers really trying to initiate up here near the all-time highs and make that push to go do it. So yeah, this is going to be a weird start to the week. I feel like we've had so many holidays and shortened weeks. It drives me nuts as a trader, but it is what it is. Like I said, tomorrow may be slow. If you're going to be trading, I won't be. I will be getting an MRI on my shoulder, so you guys can have all the fun of trading this sloppy, choppy price action likely tomorrow morning without me. So you'll see me back on fast markets with Dakota on Tuesday, but for the time being, looking at this week, like I said, I would love to see us return to value, maybe find a little bit of volatility this week and not just chop and just slowly drift higher and eventually get an FU kind of hold my beer candle move up to 6,200. I'm all for it. But if I want to be trying to get long down here towards 6,100s rather than, kind of trying to get long up here at these highs and then just getting a massive reoffer out of nowhere. So the big thing to remember this week too, it is monthly options expiration. So we'll look at a little bit of the strikes. There may be some people trying to cap it up here. I don't know if my data is just weird. I will show it to you. I'm going to look at it tomorrow, or not tomorrow technically, because options markets won't open until Tuesday. But we'll talk about it. I'm not going to try to explain it to you without the picture, but you'll get what I'm kind of articulating as we look at some of the information. But for the most part, you really need to see buyers initiate up here on the NASDAQ. Slightly different week because Friday's move was a little more bullish than ES was. ES basically, traded inside of the initial balance in the 30-minute opening range and was pretty tight most of the day. In fact, it was a great day to just get really frustrated. If you were trading NQ, you had some decent moves, but on the ES, it just was pretty miserable to sit there and watch. So in a weird way, I'm kind of glad my day ended with a DLL pretty early because I would have just been banging my head against the wall, hoping for some volatility that never came. So the same thing is kind of true for NQ. We do look like on the NASDAQ, at least for now, this is breaking out of this balance range that we were talking about. The resistance that we were seeing kind of in those 840s to 900s seems to be us breaking out to the upside. But The all-time high still lingers about 100 points higher to find some sellers that were present, and the all-time high is roughly sitting at the 22,450s would basically go make us a new all-time high and hit the air horn. So only about 200 points higher. We can get there in a blink if you've been paying attention and on Sunday nights when we've opened and gap down and things. And FYI, I highly doubt there is going to be a violent gap down like we've seen for 3 weeks. So if you came here for fireworks, you may be disappointed tonight. It was a very quiet weekend as far as headline risk and anything that could actually cause a big gap down, but who knows? This market loves to make a liar out of me. So we'll have to see. I don't think we're going to get it. I think we may just kind of chop around with tomorrow being a holiday, but looking at this, as I said, 22,400s should be your target if we continue to kind of hold above these, basically the 22,100s. If we can hold in the top edge of Friday's range, then I'd be looking for longs and be going to try to hit that long for the all-time high. There's not a lot of volume between here and there. So if we continue to build up here, it would not shock me for us to go make a new all-time high, hit an air horn, and, everybody continue to get all bowled up, and let's just keep making all-time highs through options expiration week. I think that is the gotcha, though. I don't know how crazy this week might be. It may just be us falling back into this range until the following week when the decision is truly made, just because we've seen, I know Jack and I have been saying it this week, options just are the market, guys. It's so dumb. It's the way it kind of functions sometimes. So looking at the NASDAQ, you got to be paying attention to the triple Qs. You got to be paying attention to NVIDIA, Tesla, Meta continuing its meteoric rise to a positive day every day. So if that continues, then yeah, all-time highs are in the future this week. If not, we probably fall back in range. And the first place you'd be looking to find buyers is somewhere between, this kind of low volume node that we saw in the top edge of some of these candles on the 1 hour, going back to that 840s, 850s spot, even as high as 900s, to potentially get long to fill in some of this volume. And you could easily see if 22,000 is going to be defended. It has been a reoffer spot for weeks. You've seen sellers step on the gas and continue to initiate larger moves down off of that level. So if we do come down, do we find buyers there, or do we just kind of melt back into this range and go back towards the 800s? Both, I would say, equally possible looking at the early parts of this week. If you were to, like I said, fall back inside 22,000, 800s would be your first place you find buyers. If not, we probably rotate back down towards the 550s that I've just been miserable talking about for the last month plus. That is the point of control of the last, month and a half, whatever it is, if I zoom out. And, you'd find buyers there, but the full bear case would be that full rotation back down towards the previous couple of weeks of value area lows down here towards the 21,400s down to the 21,200s. So you could expect to find the bottom edge of this range defended unless there's a catalyst, unless there's something actually moving the markets to the downside. Otherwise, it could just be a very simple value play like we've been in for weeks, where there's some rough news, the market shakes it off, continues to kind of be range bound and balance. And we are roughly 20 seconds from the open, so I won't jump over just yet. We'll watch this, and then we can jump over to gold and crude oil, see what's going on in the lovely land of commodities. But while I've got you here, any final bets? Gap down, gap up, complete chop. Place your bets. And a slight gap up on the NASDAQ. Choppy, illiquid, mess of an open so far. Godspeed. I'm seeing ones. I'm seeing massive spreads. 3.5, 4 points, 2.5. God, I love the Sunday open. Don't we all? Yeah. Chop, small gap and chop. That's what we got. But yeah, it looked like this is about what you could have expected on a quiet weekend. Not a lot of news. So we didn't really move. We are basically at the previous day high on the NASDAQ. ES still lodged in that range that it's been in the last session. So, all right, nothing too crazy after what we've seen for the last few weeks. So, oh, someone said the 2250 area. The 250 area. Yeah, that is kind of the low volume edge and the bottom edge of some of these old candles from that previous week when we made the all-time high previous to that FOMC drop. So yeah, you could find sellers kind of reoffering in that area, the bottom edge of that week's range prior to FOMC. Definitely is a possibility to find some sellers there too. But if not, you'd expect us to kind of chop around this point of control up towards the 300s, where we then would probably make a decision. Are we going to make an all-time high, or are we going to fall back into the range towards 22,000 or lower? So it's a tough call, tough to make this week. So, see what trade what's in front of you. We like to have a plan so you guys get ideas of where larger, longer time frame buyers or sellers may interact with this market. That's why you do this. That's why you mark out levels. And it could be something as simple as looking at, last week's value area low, do what I do a lot of the time, which is, utilize those volume profiles to kind of say, if we continue to kind of be time framing higher based on like value area highs or the points of control, then you can get a slight bias to the, bullish side looking at this as point of control building a little higher, value area highs building higher, and price action kind of closing at the highs from the previous week. So you look for potentially some continuation there, at least in the early parts of this week. So, yeah, that's NQ. Probably going to go make a new all-time high this week. But as I said, with options expiration, who the hell knows and who the hell cares? Hopefully there's some volatility this week. I typed in CL, so we're going to go to crude first. So if you guys remember the last couple of weeks, we have been articulating the drill baby drill narrative that the new administration has been putting out there. And for the time being, are we establishing a new range at the top edge of the old range? Even though we're now, I guess we are kind of breaking down towards the lows of last week already. Does this continue? So now I'm going to jump to a 4 hour so we can see this a little better. Who remembers this misery going back months? We're right at the base of that range. So if we fall inside 70s, this gets choppy and a nightmare to trade unless it pierces back up and we can kind of establish a new range here, which we may be doing kind of in the mid 70s. If this area holds these bold points of control and this, value area low that we're seeing on the longer time frame down here towards, the lower edges of 70, if we can bounce off this, we may be establishing a new range kind of between 70 and 73s that you could potentially trade off of. I just hope to God, guys, we don't fall back into this miserable place. This is where traders go to die. This is where you are just waiting on a headline or something to push us out of this range again. So let's hope maybe we've established a new floor at the top edge of this old range, that we find some buyers here. Otherwise, crude is dead and you're looking for value rotations between 69 and 67 forever, again and again and again. So I'm going to hope that doesn't happen. There may be a long here, but you could easily, I don't know. I don't want to say that. So with that narrative and with where we're sitting, this is kind of a wait and see. If I was going to be trading this, do we kind of make an excess low, go down into the 69s and then bounce off of it? Probably possible. But I would just love to see some kind of bottom established, start to form here on like a 4 hour or a 1 hour, and then try to get long for, another retest of these last 2 weeks of value areas, and maybe even back towards the 73s. And maybe that's the new range. We kind of chop in that area versus 69s to 67s. I really hope not. So it's tough to fight that narrative because, the logic would be more supply and, everything else. It's just, you look to see, crude maybe rotate a little bit lower, but you kind of did, because the second that narrative came out, that's all we've been doing is just moving down lower every single week. So you could find your scalps, you can find your buying opportunities. Like I said, there is one in this general area, maybe even as low as, if it were to pierce, even back, pierce inside 69s, inside 70s a little bit. You could probably take a safer long down there just because you've got all this volume behind you. Kind of a risk down here in like the mid 70s, but we'll have to see if crude starts to put in a bit of a bottom for now, or has any sort of bottom forming. It is retesting the previous week's low. So you did find buyers there last week. And then somebody reoffered and was reoffering strong the last 2 sessions. So tough trade, tough call. It's hard to fight that narrative. So just be careful if you're gonna be trading this, guys. Do know you do have a low volume node here, so you could find buyers, but we could very easily just fall back into this range where there's all of this value as well. What is ES doing what it was doing on Friday? Absolutely nothing. Just miserable to look at, miserable to trade. It's the top edge of the range. There's all that volume there. So it could be choppy until a decision's made. That is kind of how I'm going into this week. I'm not expecting a whole lot until maybe Tuesday or Wednesday when people are back. Tomorrow and tonight, I mean, it's a crapshoot, guys, if you're going to be trading this. Good luck if you are. All right, let's jump over to gold. So is gold finally making its rotation back, having a week where we're going to potentially fall back into an area where you could enter long on a longer time frame and not just be, weak time framing higher and higher and higher? Is this finally the big reoffer that came in after gold made a new all-time high in the early parts of this week and then failed to go make another one? Do we start seeing a rotation in gold back down towards, this old value area high in these 3 weeks of points of control down here? It's possible if you really got some weakness over the next week or so. Like, does gold find buyers back towards 2,800? That's where I would expect. Like, there was a lot of volume. There was a lot of movement in GC. So the first place you'd be looking is, I mean, at the very least, like if you were to get another, crazy move down, you could see, do we find buyers between the 2860s to 2850s, even as low as the 40s, kind of these last 2 weeks of value area highs, value area lows, to find buyers there. But after you get that kind of, honestly, like an FU type candle move to the downside on the 4 hour, you got to be a little hesitant to be the first person to try to long it here. Maybe even a little lower if you pierce through the last week's low, down inside of the 2900s, maybe you can try a long there, but I don't love longing it here after that type of move. Personally, I'd love to buy at a little bit lower price to try to get that next move, that next consolidation, and then move back up to make another all-time high. But this is good. Even if you want 3,000 in GC, you want to see this. You want to see us kind of go retest some of these levels before we then make the move higher. Because then you can feel a little more confident in the long and a little more confident in actually holding this, let's say, towards 3,000. Versus you just kind of had a fear that eventually there was going to be that type of move coming in GC when we've just had this type of price action for weeks and weeks and weeks. So that's how I'd be looking at it. I was saying, I think like maybe it was last Sunday when we were trading kind of, above the 2800s, I was looking for maybe something down here in the higher 27s to try to get long. You didn't really get that opportunity. Buyers stepped in at the 2800s and have just been moving us higher and higher and higher. So head on a swivel with GC. Who knows? It could just still be as bullish as ever. And that could have been your bottom on Friday. So wait and see type of approach for me with GC. Be careful. That's some selling off the all-time high. So just be aware before you dive in too crazily that we may reoffer again and make a move down towards 2800s where you probably would find buyers again. All right, and equities. That large move up above Friday's high on NQ, and now kind of rotating towards the the area where we closed again. ES doing the same. So not a whole lot going on in equities. We will jump over to some economic calendar and what's on the docket for earnings this week, and a couple other things. Sorry, guys. I did not drink enough water today. I feel super dehydrated. Let's see. Oh, and as always, if you guys have questions as I'm going through everything, feel free to throw them in the chat. I'll get to them towards the latter half of tonight's program, and we can, answer anyone's question who's got one. I usually am very happy to take the extra time and answer everybody who actually asked a question. So I will get to them shortly. But let's jump over to the economic calendar. Oh, that was weird. It scrolled like a week ahead. So obviously tomorrow is a holiday, and just to be the first person reminder, remind you guys, if the Topstep emails are not enough, you will have to exit your positions prior to the cash futures close tomorrow at noon Central Time. I believe for live accounts, that is 11:30 and 11:45, I believe, for XFAs and combines. Andrew, please correct me if I am wrong. I always feel like I screw up the dang times. But I believe that's what I remember. 30 minutes for your live accounts and 15 minutes for XFAs. Please correct me if I'm wrong. I feel like I screwed that up again. But you will have to get out of your trades a little early. If you are going to be trading tomorrow, I have no interest. But looking at the economic calendar for this week, we do have a few Fed speakers tomorrow, even though the markets will be closed, or futures will be open because we'll all be here. Yeah, I was right. Look at me. Thank you, Andrew. 11:45 Central Time for combines and XFAs, and 11:30 for my colleagues that are trading in Topstep live accounts. Look at me, actually retaining some information with a baby. Feel good about that. Needed that today. So a couple of our lovely Fed members will be talking tomorrow. Harker and Bowman being the only ones that matter for us trading currently during those times. So do be aware. There is no technical open tomorrow, but we will have Harker speaking right at the opening bell, technically. So they will, would not doubt if they, I don't know who's giving remarks on monetary policy this week. There is a bunch of Fed speakers throughout the week. So we'll check on any of them and see who's actually talking, who's giving interviews, who's at symposiums, all the other BS that they do on their book tour as well. And then going into Tuesday, when traders actually return from their 3-day weekend, we do have New York Empire State Manufacturing. I can't read, guys. It's been a weekend. And I say that because I have a kid, not because I was out drinking or something. I don't even drink anymore. And then we have Fed's Daily speaking at 9:20, as well as a 3 and 6 month bill auction. Fed Bar rounding out the Fed speakers tomorrow. The biggest ones this week is really going to be on Wednesday with the FOMC minutes. Probably nothing crazy or anything revolutionary that I would expect out of it, but it always still tends to provide some aspect of a little bit of volatility as those are releases, as the algos are skimming over those minutes and, anything else that they can kind of digest from it. And then we'll move on to Thursday, where we have more Fed speakers and the usual gaggle of initial jobless claims, Philly Fed, and continuing jobless claims, leading us right into, Friday, where we have existing home sales and the S&P's PMI or flash PMI shortly after the bell on Friday. So a lighter news week. Oh, they didn't even highlight this one, but you would think they would. After basically futures went dark after this release 2 weeks ago. So I'm going to remind you guys, I always do, because I always have felt, since I've ever learned to trade futures and I've been paying attention to news, it finally happened. But I've said this as long as I've done this show, I've said it publicly. Michigan consumer sentiment always provides a weird algo reaction, and 2 Fridays ago was the worst one I've ever seen from that data release. But maybe you guys now understand what I'm saying when I've made the joke of it is the most random seizure that occurs on the DOM and with the algos. It just provides that a level of volatility that I think it shouldn't, in a weird way, because it's not CPI, it's not FOMC, but it does. So just be aware, Friday, that is coming out again. And it was a very insane reaction 2 weeks ago. So for once, I'm not joking. It's going to probably provide a similar move, not move, move's the wrong word, but a crazy reaction. You just don't know what that data is going to be and how the market's going to respond from it. So my recommendation would be flat during this after the last one. So that's my soapbox. I'll get off of it, but I've always said this is the stupidest release. It always provides, it has stopped me out over the years, because you think it's not going to cause a big move, and then it could be 20, 30 points, but it's enough to stop you out of a trade for no reason, and then price action returns to normal. So I will leave it there. That is the data for this week. Be careful. Nothing really going on tomorrow except Fed speakers. if you're going to be trading. I know it's not random, but it's just one of those things. Like it's one of those things that a lot of us just don't pay attention to or we don't think about, but it always provides that spasm. And 2 Fridays ago was insane. And I think a lot of people went on Twitter and blamed platforms for failing. It ain't the platforms. The whole dang systems went dark. There was nothing on the tape. All right. What do we have for earnings this week? Not a whole lot. Unless you're me and you still are staring down the barrel of what could have been because you didn't buy Carvana, like you said to some of your Discord friends, at $4 because we were making jokes, talking about I'm either buying it here or the company's going to zero. And it's now trading at $285 a share. So there's one regret Nick has in life. It's missing on the dumpster diving adventure that would have been a long in Carvana because it did not go to zero at $4. In fact, if you look at the timestamp of that interaction that I had, it is on Twitter. That timestamp was the bottom, the exact bottom of to the day for Carvana. So I will take that with me for the rest of my life. I would probably not be doing the show with you guys. I'd probably be retired. But yeah. Outside of that insanity, it is a super light week. The 2 big ones that I'd be paying attention to are Thursday before the open are going to be Alibaba's earnings because it's been on a meteoric rise of about 45% in the last few months, and Walmart's earnings. Outside of those, Toll Brothers too. I meant to say that. So one of the larger home builders in the U.S. give us a little heat check or pulse check on what the hell is going on in housing. I know we have new home sales and some stuff like that this week too. So yeah, see, Coach Jay knows the last Michigan Consumer Sentiment was a great way to blow your account. Or even if you had $20,000, $30,000 in it and you were trading a decent amount of size, how to go to zero real quick if you're not using stops, or even if you are using stops because there's nothing on the books and there was no price that traded within 80 points on NQ. And then you blame the platform and that's not the reason your account went to zero. There's a great thread by a few people on Twitter explaining it and what happens and why you should not trade news sometimes. Anyway, I'm off the Michigan Consumer Sentiment. We'll see what our brethren at U of M have to say on Friday. 5 days away. I'm trying to think. Any others on here that I wanted to talk about? Nope, that's it. All right. So we'll jump over to the options front real quick, because this data might be a little weird, so I don't want to freak anyone out or anyone think I'm a crazy person. But the top edge of this range that we were kind of stuck in on Friday, keep in mind, the chain that I'm looking at is from Friday's close, and this is no expirations. This is not zero DTEs. It's everything on the chain as far as the gamma exposure. There was a tremendous amount here at 61.15s on SPX. So basically where we closed on Friday. Oh yeah. And FYI, the other markets around the world are not closed tomorrow. So you can become a DAX trader if you have a personal account. Anyway, so we see just a tremendous amount of positive exposure sitting up here, right where we closed. And we had trouble with ES and SPX kind of moving above this level. I don't know how much this is going to shift or did shift as we were, actually closed. This is the snapshot from the close. So I just take that with a slight grain of salt because I don't think my data is screwed up, but I'm just looking at this like, okay, that's a pretty that's the largest wall from as far as exposure goes and we could not seem to get above it all day. So is there some kind of large spread on this market right now, keeping us as range bound as we were and have been? I don't know, but it's something I'm taking seriously until I see the data refresh. So that could be on Tuesday. This could look completely different, but this could have been a big reason why we just could not move on ES on Friday and pretty much the latter half of the week. So looking at that, going into options expiration, if this is how it looks in the early parts of this week, then yeah, it'll take a real move in some single stocks and equities to really push us above this. Or you'll see call buying rolling higher because all things are well and we're going to go up to 6,200. But if we don't, the big strikes to be watching this week, if we were to fall back into the range, are going to be, do we ping pong this week between 6,000 and 6,100 SPX? Right now, it's about 115 points of range. And it's very possible, even in an options expiration week, even in a shortened week, that you could see both of those tagged. We've seen it many times. As far as, these kind of gamma exposure levels, where it doesn't mean these levels are going to hold, but they do sometimes act as support and resistance until the data shifts a little bit. So I'm just keeping those three numbers in the back of my mind. Obviously, even 6150s on SPX if we get a move up higher, but if I don't see the 6,000 shrink, in theory, with options expiration, it's like, do we start to make a move back down into that range? That's all I'm saying. Other than that, if everything is all as well, and air horns, then yeah, we'll probably see some call buying and some exposure shift to higher strikes, like we usually do when we get a little crazy towards the all-time highs, and then nobody's hedged anymore. But it's hard to not think to be a little bit hedged in the Trump markets, but the market doesn't really care to do that, it seems. So going into a monthly options expiration and seeing these two big strikes at 6,000 and 6,100 and 6,115s like we are, just think, if we do not see, this is what I was saying when I came on the air, we were talking about ES. If we don't see that volume build kind of above these 6130s, I am thinking we're going to maybe drift back into that range because of how I'm looking at this data. But like I said, we'll see how it shifts on Tuesday. It is a long weekend. It's hard to take too much information in until we kind of get volume back, hopefully on Tuesday and Wednesday, from where we may go this week. So that is a little bit what we're seeing with options. We'll jump back over to ES and we'll get to some questions. And then ER. ES. So pretty tight range, pretty boring Globex if you've become silence that we have seen the last 3 Sundays in a row. I'm sorry if you were looking for that here this evening, that I was not able to give you another gap down to violently trade and scalp your way like a maniac into some money. So this is more what we've been used to the last so many months since August, when I started doing the show with you guys. So a pretty quiet Sunday. No shocker with tomorrow being a holiday that there's not a lot going on. There's not much news. There wasn't really anything that happened over the weekend. So no shock that we may just kind of balance in parts of Friday's range, which is kind of how I'd be playing tomorrow if you really were going to trade. Use Friday's range and Thursday's range to kind of guide you. I know Thursday had that kind of crazy outside move, possibly breaking us out of the range, but all roads eventually lead back to balance. That's the way to think about this, because that's how the market trades most of the time. Yes, you get these moves up, but what do? We just return back into balance. So we'll get to some questions, and then I will send you all on your way to do better things outside of stare at me, talk about charts and other things that we're doing on the show. So for the last call for questions, get them in. I will get to them when I can. We got a few here in the chat, so I will start answering them. But yeah, throw them in. We'll get to them. I will answer everybody that has hopefully asked one here this evening. Nick, later in the segment, could you go through your volume profile settings? Mine looks so bad. Yes, I do this every week. So they're the same settings for my visible range as well as my fixed range. You have to manually draw the fixed range ones yourself, but you can get into a good habit of just drawing the weeklies if you like my kind of style of how I articulate this to y'all. So my settings are pretty basic. I just like a pretty clean looking histogram. Let me jump back to a 1 hour because I don't like looking at this on the 4 for the way I draw weeklies here. There we go. Looks a little better. My settings. So I use ticks for ES and NQ, and then I keep it to 4 ticks. So you can get a full point view of this histogram. I keep my value areas at 70% for you guys, so you can see the value area highs, value area lows exactly. And then you can see my color schemes and the way I've got it set up. But super basic, super simple. I highlight the point of control again for you guys just so you can see it. But as it just becomes noise or messy to you guys, I mean, you can pretty much find where the highest volume area is. And we don't trade exactly on it. We tend to drift above it, drift below it. So it's more of a visual thing. But those are my settings. Like I said, same thing for visible range. Keep it the same. This is an interesting question. Yeah, I'll answer it. So how do I navigate health insurance as a full-time trader? So I have done both routes. I have paid out of pocket for a policy myself, and I have a company that I do consulting with that has put me on, how do I describe this? So I still do work for them. They treat me as a W-2 for the purposes of health insurance. I still do work for them, but it's a very small little thing. So I am also on their insurance too. So there's a couple ways to go about it, but if you're an individual trader and you need a policy somewhere, I'm not an expert in this, guys, but there's a whole bunch of marketplaces out there that you can send out in the world and get yourself some coverage. That's what I did for the longest time until this company was nice enough to do that for me, which was awesome. So I'm very thankful for them. But yeah, that's kind of how I've handled it for the last 2 years. I did about a year myself, and then they were nice enough to make that offer to me. So took them up on it. Nick, what do you think is the catalyst of this move to an all-time high? There are still layoffs all around, even by Meta. Yeah, we are just that much in a buy the dip mentality in this market. Nothing seems to shake it. So layoffs couldn't do it in 2021, 2022. Obviously we made the low, not because of, I think, companies' balance sheets. It seems like it was more just fear of the inflation returning. But what is the move to all-time highs? That's just the market we're in. PE ratios don't matter anymore. Earnings don't necessarily matter anymore. It's just everything's being bid. The AI narrative, it seems like, has been that strong, and tech has pretty much leading the indexes. I think there is an issue still, I would say, a little bit with like breadth of some of these companies and yeah. So you still see, I don't know, maybe it was last year where if you took out the Mag 7, it was like the S&P was almost flat. So yeah, there clearly is some of that in this market too. So what's moving us higher? It's still probably 7 to 10 companies, but you can't really trade with that mindset. You have to trade what's in front of you. And the market is telling us that it doesn't really care about some of this information or any of this bad news. Bad news has been, we had a hot CPI and a hot PPI, and there was fears of inflation not being defeated months ago. And it still looks like it's going to be stagnant for a little while. And the Fed's going to have to pause and wait and be in a wait and see. And the market, once again, hot CPI, hot PPI, and shaking it off. And we are on the cusp of all-time highs. So you can't fight the tape. That's really the only way to look at it. Does it make a lot of sense? No. Is it probably an all-time high and a start of a new 5-year bull run? Probably not. But you can't fight it. You really can't. You tend to be punished for wanting to have any sort of, bearish bias in this market. So until the market says otherwise and we get a good move down, you should be looking for, dips to buy and rips to sell at the right time. There are strategic times to be short. You guys see me take a lot of shorts sometimes. There's the right times to do it, and there's times when it makes absolutely no sense in the auction. So that's kind of why I say, my advice for people, if you've struggled to trade combines or past combines or get payouts in XFAs, like if you're taking shorts, stop. Look for setups for your style to the long side. You just will be bailed out of situations a lot more than you will if you're taking the same type of trade to the short side. So it's kind of how I think of it. Where do you get these gamma levels from? I see they're important. There's a ton of data providers out there with the information. You can check out Spot Gamma. You can check out GexBot. There's 100 out there now, guys. And some of them will offer a lot more information as far as like flow data. There's Tradealytics. There's a million. So you can do a little Google search and there's free trials for a bunch of them. So you can kind of get a gist of it. I get information paralysis and get too many inputs at times. So I have dumbed down a lot of the way I look at the information, because you can just drive yourself insane looking at too much and too many inputs. So for me, just knowing the big strikes, doing the math roughly in my back of my head for the spread, and just keeping track of it throughout the week and on the 0-day chain as well. That's the best way to do it. But yeah, there's a ton of providers out there. Most of them, if not all of them, are going to have a cost to see the data, but a lot of them that do have a paid subscription, in theory, they offer a lot more than just, here's some gamma levels and things like that. So play around, see what you can find, but that's kind of the gist. How do you think tariffs on Japan steel will affect G6? 6J. I have absolutely no idea. I don't trade Forex. I literally have never. And I am not the biggest. Yeah, this is where I mean, my skill as a trader, I don't get too in the weeds of geopolitical macro stuff. It'll just make my brain melt. Because at the same time, I have one reaction to it and I could have a perspective on it and the market doesn't give a shit. So there's my one curse word of the, of the show. So yeah, I don't have a big perspective. At the end of the day, it just, when there's tariff wars and, you know, things like that going back and forth, it just creates uncertainty in every market, which creates volatility, which can be good and bad depending on your style of trading. So that's how I look at it. What's your view on gold? We just covered it. So you have a gold coming into the previous, or like last week's point of control. So you may find some buyers here. You might find people stepping in to save us, you know, pretty much this 2890s, maybe even as low as 2880s. You could find buyers stepping in. So personally, before I'd get long, I would love to see a pierce below kind of the previous week's low, maybe even dip inside, you know, some of the value area from the previous week or 2 weeks ago, excuse me. And then find some buyers kind of getting us back into the, you know, lower edges of the 2900s before I'd be trying to long. But personally, I'm not loving this move and closing at the lows. I'm wondering, do we kind of dip a little bit further in gold, maybe even down here towards the 2850s? And then do we find buyers? So I'm just taking kind of the last day or so's price action seriously, with that kind of move down towards the lows. Before I'm really looking to be the first person to buy it, I just not am enthusiastic about buying it right here at this spot. I just would, if it pierced below and came back in, I'm much more comfortable. I'm just not knife catching it here, I guess is what I'm saying. So if we lost it, you could expect us rotating about 50 points lower down towards the 2850s. All right. So, I see another one. I'll answer this too. What is the time frame of your volume profile on the right? So whatever time frame you're looking at, that's visible range volume profile. So if I zoom out, it'll grab those candlesticks and repaint the volume profile. It's just based on what candlesticks are on the screen. So that's all. Nothing else has changed. It just goes by whatever is in front of you. And if there are no more questions, we'll do a quick recap and get out of here. How about that? Get everyone back to their lovely Sunday evening with their friends, family, significant others, kids, whatever it is y'all are doing to get away from screens, because this looks like it's going to be potentially a snooze fest of a Globex. Can I look at Bitcoin, please? Sure. Why not? Something I don't do. But let's take this as a volume profile trader who does not look at this and give you a slight perspective on maybe what I would do or how I would attack this. Because this is where you say you can start to use concepts, even if it's things you don't look at, things you were curious or wanted to trade in the future. This is how I'd kind of look at this. You can take something like volume by price and start to create an idea of maybe how I'd enter the markets here. So you were coming in to the previous week's value area low down here towards the 95,950s, right? Yes. Down towards 95,950s. This is just a lot of numbers, guys. This is why I don't trade this. How do you do a prep for this when I got to do 5 digits? That's why I don't trade the Dow. 95,950s would be the bottom edge of the value area low and this higher volume node that we're seeing here. So looking at micro Bitcoin, taking everything else out, just looking at this purely from a volume profile perspective, you could feel pretty decent taking a stab long here, knowing you're at a value area low, knowing you're at a high volume node here, and knowing your risk is looking at the last month of volume here is that this could easily drift down towards the 95,000s in micro Bitcoin. So you can take a stab long up here. I have no idea as far as how to establish risk in this, how much it can typically move in a given 5-minute candle, hour candle, how it trades at this time of the day, but just purely from volume profile, you could take a strategy of just looking to try to get long down towards this high volume edge here for a trip back up towards the 98,000s, this 2 weeks of point of control area, this high volume node here. So you're doing that kind of play where you're looking for longs down here, and maybe you start looking to cover some in the 96.7s, as well as kind of looking to ride longs all the way up towards the point of control from the previous week. I am absolutely not endorsing anybody trading any bit of micro Bitcoin off of this idea. That is purely me just blindly pulling this up because somebody asked in the chat, me humoring them because I haven't looked at a Bitcoin or micro Bitcoin futures chart since it was super volatile back when we were trading at like the 80,000s. So that's just a knee jerk look at this, but that's how I'd be gauging this is, do you start to form a bottom here from the last few weeks of volume by price? And can you ride this on a long back towards, 100,000 in theory? So that's how I'd read this. I'm going to say it again. Topstep risk disclosure can go in the chat from Andrew. This is not a plan. This is me knee-jerk looking at a product that I do not look at all and just giving you an honest reaction on maybe we try a long here purely based on the volume by price indicator that I have on this screen. There is no other logic based on this trade or endorsing any trade in Bitcoin whatsoever at a time like this. But that's how I look at this. Micro Bitcoin, you're just looking for a few thousand points for a scalp. I know. That's why I don't trade this, guys. I don't know how much this dang thing will move. I see a massive 4-point spreads or 30-point spread, however you read this. But if you're skimming for, looking for a swing long, I mean, maybe that's the play. Thank you for everybody humoring me and this person's question in the chat. How do you guys trade this? How do you crypto guys do this? I look at this and I'm like, I want nothing to do with this. This is a hot mess. Godspeed. All right, we're going to get to one more question and then we'll call it a night, guys. So, hey, Nick, thanks for your time each Sunday. Question: how many years did it take you to get comfortable with your personal setups? What are some things that helped you along the way? So, I mean, honestly, guys, it took me with futures, in trading in general, but there's so many layers to it. Getting comfortable. I'm still not comfortable. I'm confident in my, way of doing things, my strategy, my plans, things like that. The way I read the markets, I'm confident in it. Comfortable, I don't know if I'd use the right word. This market never makes me comfortable. It's just the way it can move sometimes. So most of it just came down to starting to have success from concepts I was learning, whether it be basing, establishing longer time frame levels based on volume profile, based on MGI. So just seeing the market react and understanding what price action tends to do when it hits certain spots that I had marked on a chart. That's where I would say it didn't make me comfortable, but it gave me confidence in my research, my analysis, my, hours of doing like EDU content on YouTube and other, traders and indicators that I had played around with, like really understanding like what does the order flow actually mean behind it when it interacts with this, when Delta says this, like what does that actually mean? Like what is actually happening? And once I kind of had even an elementary level aspect of knowledge behind that concept or indicator or level, or, okay, price reverses at a value area low and trades into balance. It's like once you kind of get that validation from it, as you're seeing it happen in real time, that is what gave me, comfort and confidence to feel good about my setups and things that I'm looking at and expecting to happen when price interacts with a certain level and things. So it took a good few years. I started trading futures in late 2020, and I did not start feeling comfortable until probably late 2022, and didn't really start hitting my stride until the early parts of 2023. And then I've kind of never looked back, but the market has behaved. You can't, once again, I don't feel comfortable is not the word, just because I still don't feel comfortable at times because the market's dynamics can shift. Like you've seen an evolution in options moving this market the last 2 years. So it's like you constantly have to be re-educating yourself, not necessarily learning new concepts and new ideas, but just staying in the weeds of like dynamics that are at play in the market. And once you kind of are doing that as a trader or searching for new information or new dynamics that are affecting like if something worked before and something changed, like why is that? What is potentially happening? Why is this breaking down now in this vacuum that used to work? So if you can evolve that side, and this doesn't even talk about the mental side of all of this stuff. We could spend hours digging further, but since you said about setups and things, like most of it just came down to like validation of educational content that I was learning and trying to understand, and then seeing, okay, prices approaching, X, Y, and Z, my gut would tell me this may happen. And then when you see that kind of happen in real time, this is where the pattern recognition in your setups and things and how price reacts when you're approaching or doing certain styles or concepts or entries, exits, things like that, you get that extra level of validation. And then you can start to feel like, you're more comfortable or more confident in an entry. It's kind of that educational side that you have to see validated by the auction itself that kind of proves you starting to understand when things happen and why they kind of happen. So I know that was a long-winded answer, but that's kind of the way I think about it based on the way you asked that question. But yeah, it's you're never comfortable. You can start to feel confident. And it took me a few years to feel confident in what I was doing and the way I was executing and the way I was managing risk and things like that. So I hope that answers your question. Okay. I'm tired, guys. I feel like that was a long-winded show. So we are coming in on an hour here. So I am going to let y'all go. Quick recap ES, and then we'll get out of here. So as I said earlier, when we were coming on the show, we are trading towards the kind of highs, the tippy top of this balance range. You want to see buyers kind of get out of this 130 spot and start building in the 140s, 150s on ES to show me that we are going to go make a new all-time high and we're not going to get reoffered and fall back into this range. If we do fall back into the range, the first place I'm looking for buyers is going to be around the 6,100 spot, even as high as, like I said, 6,105s, to see, do we find bidders stepping back into this market to, fill in some of this volume at the higher edge of this range to show me, yes, we are traversing higher. We are finding buyers at higher prices and continuing to move up towards the all-time highs. If we don't see that, I would expect us to potentially traverse this range back down towards the 6,000s. So that is kind of how I'm reading this week. Options expiration, it's very possible, guys. And I said this with looking at some of the gamma data. If this does fall back into range, options expiration for the month of February being this week and being on Friday, if we do fall back, this could be our range for the week. We could still be stuck in this purgatory until there's a headline or something else coming out. So I want to see buyers continue to show enthusiasm and buying up here in the 130s, 140s, and holding these levels. Otherwise, yeah, you're going to get that full value rotation likely with all of that options activity we were seeing even down towards the 6,000s. So I'll be having that marked on my chart. The value area lows from the last couple of weeks and down here towards the 60-10s area, and then as low as 6,000 is how I'd be looking at it if we do fall back into the range. So that's the show. I hope this has been helpful. I hope everybody feels more prepared for their week. Do remember, if you are going to be trading on Topstep tomorrow, you got to be out of your positions in combines and XFAs by 11:45 a.m. and 11:30 a.m. on the Topstep live accounts. So just be aware. I don't know why you'd still be trading at that time on a holiday type of day, but everybody's going to do their own thing. But yeah, early close tomorrow. We'll be back on Tuesday, full throttle, full volume. Hopefully, maybe somebody will get the VIX out of the grave and give us some fun this week. If not, maybe we're just going to be range bound. Maybe we'll go make an all-time high. But thank you guys for being here. Thank you for tuning in. Thank you for supporting me. I will see you guys on Tuesday for Fast Markets with Coach Dakota. His show will be on in about 90 minutes. So do show him some love and do get his perspective on going into this week. I'm sure it'll be a lot of fun. So cheers, guys. Have a good night, and I will see you tomorrow and later this week.